Imagine a cryptocurrency quietly gaining traction while everyone else is chasing the obvious coins. By the time the public notices, it could already be too late. Today, I'm going to show you why this one could make waves in a way most people don't even expect. So let's start with the market itself. Bitcoin and Ethereum dominate headlines, and casual traders often feel they're just following the crowd. But history shows us that the biggest gains often come from coins quietly solving real-world problems, gaining adoption, and also attracting serious investors before the media catches on. So take cross-border payments as an example. Traditional systems like SWIFT can take days and charge high fees. This crypto is designed for instant transactions with minimal costs. Imagine sending money from Europe to Asia in just seconds instead of 3 days, which companies and individuals both benefit from. And as businesses integrate this coin for payments, its demand naturally increases, which can affect its market value. So now think about institutions. Recently, several banks and fintech companies started exploring cryptocurrencies as part of their treasury management. For example, a bank in Singapore tested crypto settlements to reduce costs in cross-border trade. Coins that provide practical solutions like the one we are looking at are the ones institutions gravitate toward. And where institutions go first, price action often follows. Beyond banks, payment processors, e-commerce platforms, and even travel companies are all experimenting with crypto solutions. For example, a major European online retailer started accepting crypto as payment for certain products. So when adoption grows, even slowly, it creates real usage, not just speculation. Utility drives long-term value, and that's what smart investors look for. Here's where strategy comes in. Crypto markets have cycles. There is an accumulation phase where the coin quietly builds strength, followed by increased adoption and eventually a surge in interest. Watching on-chain data, trading volumes, and news about partnerships can give you early signals before most people even notice. Unlike chasing the next big headline, this is about observing trends and patterns that have historically worked. So imagine this, a mid-cap coin quietly partners with 3 international payment providers. Daily transaction volume doubles over 2 months. Then an ETF or institutional fund announces it's exploring crypto exposure. Suddenly, the coin goes from being overlooked to in high demand. And early observers, those who were paying attention to real adoption, benefit the most. So that's why understanding adoption and utility is far more valuable than following short-term market sentiment. And of course, nothing is guaranteed, and regulatory changes, market corrections, or technical issues can affect any coin. But when you focus on coins solving real problems with tangible adoption and institutional interest, you're reducing risk compared to blindly following trends. So knowledge and timing are your best tools here. If you want to follow these opportunities like this, start by researching partnerships, real-world usage, and institutional interest. Track projects that are quietly growing their user base, not just the ones getting media attention. So look at transaction volume, integration with payment platforms, and regional adoption trends. These are the signals that often precede major price movements. So the takeaway is simple. Focus on real-world value, adoption, and patterns, not just headlines. The next big movement in crypto isn't always obvious. So by watching quietly, learning actively, and staying patient, you position yourself to spot opportunities before they explode in the public eye. So stay informed, pay attention to utility, and you could be ahead of the curve when the market starts moving. I will see you in the next one.